In this fourth film on the museums and galleries tax relief, I'm going to talk you through what expenditure qualifies for the relief. That's important to know because the value of the relief depends on qualifying expenditure. The tax relief assumes that an exhibition has four distinct phases. The first of those is development. At that stage, the exhibition is still a concept and a decision hasn't yet been made to go ahead. The second phase is producing. That follows the time when a decision has been made to go ahead with the exhibition, so it's real, and it includes all of the work undertaken up to the opening of the exhibition. The third is running. That's the time when the exhibition is open to the general public to come and view. And finally, deinstallation and closing, the fourth phase, covers everything that happens after the doors have been closed to the general public for the last time. There's some expenditure which doesn't qualify for the relief. If you think back to the four-phase approach to an exhibition which I've just talked about, expenditure incurred in the third of those phases, running, doesn't qualify for the relief. So money spent on things like invigilation or maintenance won't be eligible. You can claim for development costs, so costs you incur in the first development phase, but only if the exhibition then moves into production. You can claim most of the costs incurred in the production phase as long as the exhibition goes ahead. If the exhibition runs for 12 months or less, you can also claim for expenditure incurred in deinstalling and closing the exhibition. There's some expenditure you can't claim for. In particular, you can't claim for expenditure incurred in activities that are not directly involved in putting on the exhibition. So that means money spent on things like financing and legal services. It's also important to note that anything you spend on marketing or promotional events is not eligible for the relief. And finally, at least 25% of your production expenditure must be spent on goods or services that are provided from within the European Economic Area. So to summarise, you need to look at all of your expenditure, then deduct from that any non-qualifying expenditure, and you'll be able to work out what the value of the relief is for your organisation.